Thanks, Max.
Set you up if something's wrong.
Yeah. Okay. I think, and yes, we are indeed live. Okay. Hey guys, for everyone just tuning in, we're just gonna take a couple of more minutes, and then we'll be starting our discussion. Let's see, everything seems to be in order with the stream. Yep. Just got a notification about the stream, so that's working. Max, you here? Can you hear me?
Yes.
Okay, good. I think we're good to go. Let me start recording in OBS as well. Just fit the screen a bit better. There we go. Max says that it looks good. Okay, we're ready. All right. Hello, everyone, and welcome to another edition of This Week in Crypto, the Halvening edition. So if this is your first time here, what we do is every Friday we hold a weekly panel where the Santiment team and sometimes some of its community members, we come together and we discuss the recent crypto market events. But we do it from a fundamental perspective, which means that we try to look at the market from a combination of pricing, on-chain, social, and development activity data. So if you have never used Santiment before, I definitely suggest starting with santiment.net, checking out the site during or after the call. We have built dozens, even hundreds of tools and custom metrics, indicators, strategies, all built around these three sources of information that I just mentioned. So on-chain, social media, and development data. Now, the reason we have done all this is to help you guys better understand the crypto market from a variety of different angles and the behavior of its different participants. So all of our metrics, the main purpose and the main goal with all of them is to try and figure out what is the behavior of the certain relevant stakeholder or driving agent of the crypto market. And you'll see today kind of how we talk about a variety of them, from whales, miners, general traders, short-term traders, long-term traders, weak hands, strong money. We're gonna kind of go over as much as we can in the next, well, maybe 30 to 45 minutes. We'll see how long it takes to get over all of it. So I'm not gonna talk anymore. I think we've got quite a lot of stuff to go over. So keep in mind that nothing that we say today should be construed as an investment advice. The entire show is just for entertainment and educational purposes. You should always do your own research before making any sort of investment decisions. And I also strongly suggest checking out our Discord if you don't want to kind of wait until next Friday for these types of discussions. We talk about the market every day in our trading channels. We talk about everything that we see in terms of on-chain activity, interesting spikes, and how they correlate with the price action. So the link to the Discord is going to be in the description of this video. Make sure to check it out. And also make sure to subscribe and like this so more people get to see it and we get to have more interesting discussions over time. So, all right, the biggest, obviously, topic on everyone's mind in the crypto community currently is the upcoming Bitcoin halvening or halving. So what you're seeing right now on my screen, by the way, just let me check. Guys, Brian, Max, you can't see my screen yet, right?
Nope, not yet.
Okay, let me just share the screen as well so that you can see it as well. How about now?
Yep, looks good.
Okay. So what you're seeing here, guys, is what we have called emerging trends or social trends. Basically, we have this custom social data set of over 1,000 different crypto social media channels that we track. So we track crypto Telegram groups, all of the relevant crypto subreddits, Twitter personalities, Discord channels, professional trader chats, and we compile the data and the messages that we receive and collect from these channels on a daily basis and allow you to basically search for any word or phrase on crypto social media and see its amount of mentions over time. So here I've already searched for halving or halvening, which is basically, or is just a modifier that says, tells our system to look for mentions of either of these words over time. And I've plotted it against the price of Bitcoin. So the price of Bitcoin is in green and the amount of halving or halvening mentions on crypto specific social media is in blue. And this is what's happening today as we speak. So maybe if I zoom in a bit, we'll see it a bit more clearly. There we go. So right as we're talking, there's the biggest spike in halving and halvening mentions, probably in the last year and even more, but definitely over the last 3 months. And you can kind of see when there were other sort of notable spikes in halvening related discussions. Every time they kind of came at interesting times in Bitcoin's price cycles. So here at the sort of first bottom before the Black Thursday, I think there was a lot of talk about, oh, is this the first sort of pre-halvening dump? And then obviously during the Black Thursday, here as Bitcoin has kind of tested 7.5K level for the first time before the consolidation on April 29th, as Bitcoin was trying to breach 9K. There was a lot of talk here about, oh, finally the pre-halvening pump. Everything that everybody said was going to happen is finally happening. And then obviously we kind of came into a consolidation phase for about a week. And then this is what's been going on over the last week. So a lot of hype around the Bitcoin halvening, especially obviously driven by the push above 10K or, around 10K that is currently going on. So we have talked about halvening in our insights a few days ago. So if you go to insights.santiment.net, we actually wrote 2 articles about halvening in the past 2 days, one on May 5th and another on May 6th. So this one is quite interesting. This is Maxim's, our founder's predictions on the halvening and the price predictions, basically. So Max ends the article by saying that he predicts the likeliest scenario, or his favorite scenario, is growth to around 13 to 15K before the halvening. So currently we are kind of, getting there. Not to jinx anything, but Max, do you want to, just expand a bit on what made you make such a bold, bullish prediction? I mean, 13 to 15K, that's quite a lot. That's, almost retesting the all-time high. So defend your position, my friend.
Defend your position.
Yes.
No. Well, first, Dino, well, thanks. I didn't know you will pull me in this topic. Keep in mind, this was a paywall. People are paying to read this inside.
This is true, yes.
But on the other side, you're doing, maybe it's good. We have a limited amount of people listening to this podcast yet. Yeah, it will be more anyway. So the reasoning was, as you know me, contrarian and behavior based. Yeah, you're right. There were quite some talks, but when I investigated the talks and when I asked around, most people were expecting that we will see first correction. It like almost was a consensus. Say, oh, wait a second. whenever I see consensus among people around, say, okay, I bet against it. And this was the initial thought. And then I checked some metrics here and there around, and I realized that I don't know if I posted in that insight that stable coins are not yet much committed to buying Bitcoin and also Ethereum, and the stocks that they expect first correction. And then I thought also on the last grow to last open at 30th of April, there were big movements of altcoins, and altcoins, they are the ones who know how it happens before. So they say, okay, we might be expecting we can buy cheaper. Say, oh, wait a second, they will not be cheaper first. They will, the market will make you FOMO and will make you buy expensive, and then it will crash down. And that's how my prediction came. Or let's say I'm betting on it. Yeah, I'm betting on it that we'll keep growing unless everyone is forming and say, okay, this is a halving rally, guys. We were waiting for corrections. There will not be one. Everyone in, and then it will go down.
Yeah.
When everyone will say, okay, it cannot go down. When we will hear it cannot go down, it will go down. Yeah, you know how it works.
Yeah, so this is something that this is something that I was in my article the day after yours. I was basically making this point that the halvening skeptics are kind of turning up the volume, because we saw this spike in the once again in the halvening chatter. So this was actually here when I wrote the article. Now the spike is much higher even. So when I did what I did, basically, guys, in Sand Data, which is data.santiment.net, there's a marvelous tool which basically allows you to type in any words that you want, and you can kind of see the mentions or read the messages that we have collected for that word on several crypto social media channels. So I was literally going over each and every mention of halving or halvening that's been going on over the last couple of maybe the last 24 hours when I wrote the article. And I saw the same thing that Max was just talking about. So there was still some bullish sort of overtones, people saying that Bitcoin is going to break the all-time high before the halvening. But in general, there was definitely a feeling that the bearish crowd is kind of starting to take momentum, and there's a lot more bearish sort of feelings and sentiment. People are calling the halvening a marketing hype and scheme, a whale trap, fake news even. So there was quite a lot of stuff about halvening just being this overblown thing that is not going to have any sort of impact on the price, or actually is going to have a negative impact on the price. And this is also kind of supported by our other social metrics. So what you're looking at here now is what we call Bitcoin sentiment volume. So essentially, based on this same data set of over 1,000 different crypto media channels that we track, and the messages that we collect, we have also developed a sentiment algorithm. So we have a system that kind of filters the positive and negative messages based on the feeling of the message, and it plots it against the price of a coin. So essentially here we're looking at the sentiment on Telegram specifically. So you can choose for any sort of channel that we track, you can choose is each specific channel and any specific project. So currently we're looking at Bitcoin related sentiment on Telegram. And obviously, so zero would be sort of an ambivalent or the equal amount of talk of negative and positive mentions or messages relating to Bitcoin. These large spikes would be extremely bullish sentiment on Telegram related to Bitcoin, and these large dumps would be obviously negative. So what we have seen on a lot of different social channels recently, and this is what Max has been referring to and what I've been seeing as well, is this sort of strong decline in Bitcoin related sentiment. Essentially, a lot of people seem to have gone over the FOMO phase and are currently expecting a strong correction in the pre-halvening days. This is not only for Telegram, but I think it's the most visible for Telegram. Like, for example, if we look at Twitter, I think we are going to see a relatively similar pattern. There we go. So basically the same thing. We saw this massive spike in bullish sentiment. A lot of people actually, either FOMOing in or talking about FOMOing in or talking about other people FOMOing in. But there was this huge spike in bullish sentiment for Bitcoin on Twitter. And then over the last couple of days, basically ever since, Ever since this spike in halvening chatter, there was a sort of correlating dump in the sentiment for Bitcoin. So it's still going on, and I think it's still fair to say I haven't really looked at all of the messages today just yet. I'll look at it after the call, but I think it's fair to say that a lot of people are still kind of talking about an incoming correction, and the exact opposite, as Max has said, it continues to kind of envelop on the charts. So it's going to be interesting to see what happens in the next couple of days with the halvening talks. You can see currently the top trending words on crypto social media. So based on all of these messages that we track, these are the 10 words that are currently kind of gaining the most social volume. So basically the most discussed topics on crypto social media are these 10 words. And you can see HODL, love, BTC. It seems like a lot of people are currently actually kind of turning bullish, at least based on this, towards the price of Bitcoin. And given the fact that HODL is actually the first word, maybe there's now with the move above 10K, maybe there's a lot more positive sentiment that we'll be seeing in the next couple of days. And then halvening, Bitcoin, BTC, alts, and 0x, I think, because it also is experiencing a pump at the moment. So anyway, for now, I think the general consensus, at least a few days ago, was that we are going to experience a correction. And since then, Bitcoin has done nothing but pump. So I definitely suggest, if you have access to sand data, to kind of go and poke around and see what the current or the latest mentions of halvening are about. Just whether there's more of a bearish overtone still, or if the bulls are finally starting to kind of take over on different crypto social channels. And yeah, for now, I think we're going to kind of leave it at that as far as our social data and as far as Bitcoin social data. Another halvening related topic, however, that's been going on over the last couple of days is it's connected to these alts mentions. So as Bitcoin was kind of trying to break above 10K, there were most of the altcoins that were actually trading down against their BTC trading pairs, especially within the top 25 cryptocurrencies. Most of the alts were down against Bitcoin. So there was this rising narrative, and I wrote about it yesterday. Let me show you the article. I think it's free, so you guys can read it for free on our platform. Basically, the idea was that a lot of people now are talking about altcoin exodus. A lot of people seem to think that this divergence between the price of Bitcoin going up and the price of all of the other altcoins going down, although they have since slightly recovered, is truth that or proof that the current Bitcoin rally is basically traders fleeing from altcoins and moving into Bitcoin ahead of the halvening. So the question is, can we find any sort of evidence to support this theory in our on-chain data? Because if what the crowd is now saying is true, if a lot of people are kind of flooding away from altcoins and into the top cryptocurrency, we should see some patterns or some sort of discrepancies and anomalies in the on-chain data of the biggest altcoins. So let's take a quick look, starting with Ethereum. And oh, ETH. There we go. Okay, so what I wanted to look most specifically is Ethereum's exchange inflow data. So what we're seeing here is the amount of Ethereum that is being moved to centralized exchange wallets on chain over the last 6 months. But specifically, I want to look at over the last 1 month because indeed as I was writing the article, I have noticed this actually when I was writing it, it was still around here. And then when I was finishing it, it's the exchange inflow spiked all the way up to here. So there seems to be, if you look at sort of recent historical trends, there seems to be some credence to this idea that a lot of altcoins or Ethereum in this case has been recently moving to exchanges. Actually, the amount of Ethereum being moved to exchanges just yesterday 150,000 was even greater than the amount that was moved here at the very top at around 200 and what is it 227 230 I think that it was retesting. So there was and there has been over the last couple of days an increased amount of Ethereum moving to centralized exchanges. And I also wanted to kind of figure out if this has anything to do with how the Ethereum whales have been behaving and if there's maybe a correlation between this spike in the exchange inflow for Ethereum and the behavior of
Dino,
yeah.
by the way, I think you're moved to Sun-based now to production. You can choose amount of token hosts. But it doesn't split into exchange and exchange. Okay, no. Okay, go ahead.
Yeah. That's why
it's
I wanted to.
That's
why I wanted to show it here. So let me show you this particular chart and let me look at the last 6 months, for example. And balance in USD, no. So we can look at the actual Ethereum. Okay, so what you're seeing here, let me look at year-to-date data. Okay, so what you're seeing here is the collective amount of Ethereum that is currently or over time being held in the biggest non-exchange wallet. So this is the total amount of Ethereum held in the biggest Ethereum whales addresses. So what we have seen over the past couple of days ahead of the May 6th, May 7th dump was actually a slight accumulation period. So almost 250,000 Ethereum were added by the biggest Ethereum whales in the days prior, actually around this sort of a slight correction. However, just recently, we have experienced this slight decline of around exactly 150,000 Ethereum from the biggest whales. And if we now look at the collective balance of the biggest exchange wallets holding Ethereum, there's a correlating spike, basically perfectly correlated with this spike as well. So the amount of Ethereum moving to exchanges spikes, there's a spike in the amount of Ethereum held in the biggest exchange wallets, and there's a dip in the amount of Ethereum held by the biggest Ethereum whales. So it seems, at the very least, that there is some correlation between the spike in Ethereum's inflow and the dips in Ethereum whale holdings. What that tells to me is that there's been maybe some early jitters around Ethereum's price, and that there actually, could be at the very least some sort of reasoning behind this rising rumor that some alts are being kind of bled into Bitcoin. The similar thing has been observed for Ripple. So this is Ripple's exchange inflow data over the last month, and it's even more pronounced here. So over 30, what is this? Oh, actually 71 million XRP has been moved to exchanges right here. Yesterday, I think. No, this is actually today. So it's the same sort of pattern that we were observing at around some of the biggest altcoins. So for now, I would definitely keep an eye on these charts and figure out, if this trend sort of continues in the next couple of days, this might actually be worrying for a fair few altcoins. However, this is by no means sort of an overarching theme. This is not like not all altcoins are experiencing the same sort of bleeding into exchanges. So I wrote yesterday about a bunch of different altcoins that have yet to have any sort of move to exchanges whatsoever. So some of the biggest ones, including Chainlink, have done almost nothing. There's been this small spike, but if you look at the historical values, it's really nothing out of the ordinary for Chainlink. The biggest Chainlink whales continue to accumulate. So this is the collective balance of the top 100 non-exchange Chainlink addresses. There was no dip in their holdings. They still hold about 750 million Chainlink. Kyber network, pretty much the same. Over the last 7 to 10 days, there has been no sort of discernible signs of exchange, of the spike in exchange inflow. Engine coin as well, Augur too. Now, 0x has seen some inflow of coins. However, I think this is more correlated to this massive spike in 0x's price rather than anything else. And I think Brian's going to talk about that in a sec a bit more. So anyway, I think all of this, in terms of both the spikes in the halvening talks and the spikes in Ethereum sort of inflows and the dips in Ethereum whales holdings, I think all of these things combined point to a lot of people expecting that some major volatility is going to be kind of happening within the next couple of days. So I think it's going to be quite an interesting time. Whatever happens, I would be most surprised that we just stayed around the same levels as we are today. So if Bitcoin continues to just consolidate around the 10K level in the next couple of days, I think that, to me personally, would probably be the biggest surprise of all. I don't know. What do you guys think, Max? Brian, Max, are you still kind of sticking to your prediction, rising to 12, 13K?
Bitcoin.
Yeah.
Now even more based on our prediction game in our Discord channel.
Mm-hmm.
Now it just finished 20 minutes ago. Yeah, so the results are published. Most people don't believe still in that price will grow. You know, the majority don't. I stay on my on my words still. Yeah, I keep, not that I insist should be doing, but yeah.
Okay.
Yeah,
go ahead, Brian.
I was going to say, and I'll show here in a second, the metrics have definitely been rising. The three key metrics that Maxim discussed a couple months ago in his article, which is daily active addresses, transaction volume, and social volume, they're all supporting this rise by Bitcoin right now. And I'll visualize that here in a moment. But what we're seeing is on this rise, all of the key metrics volume related are basically following the price. And with that in mind, there aren't really any divergences between what the price is doing, crossing over 10K yesterday, and being contradicted by short levels of daily active addresses or volume. And when that's the case, it's indicating that the price is able to continue going in the trajectory it is, as long as these three volume metrics are supporting it. So if you want to send over the screen share to me, I can sort of visualize that.
Yeah, I think this is a good segue to some of the templates that you have prepared. So I'll stop presenting and we can go more into some of the on-chain templates that we have that are available to everybody with a Sandbase Pro account. So guys, everything that you're seeing today is available on Santiment, either at app.santiment.net or data.santiment.net. So some of the stuff that we are talking about today is free for all. Some of it is paywalled for just $49 a month. You can get access to over 50 different indicators for most of the largest cryptocurrencies and all of the ERC20 coins, as well as a bunch of pre-made templates that Brian is going to go over in a sec. So Brian, I'll give the floor to you.
All right, thanks, Dino. So as I was saying, we have three key metrics here all layered together, and I'm going to sort of isolate them one at a time here, starting with social volume. Social volume on the 6-month chart is shown that we had the biggest spike right around Black Thursday here, and then we saw a recent spike right around, it looks like it was about late April, and when that late April hit, that's when the price started to flatten out right around the high 8,000s. And since that time, it kind of went away. Everyone said, well, this might have been the top. But what we saw was yesterday, there was a much larger spike, pretty much the biggest we've had other than Black Thursday over the past year. And this spike basically said that we are hitting that 10K mark, and there's all this polarization around the halvening. Is it going to continue, or are things going to drop? But what we can see is that the other two metrics are following that. So when we look at transaction volume, for example, we see that it's been a steady increase since late November, or early November, that is, and it's more or less followed the trajectory of what Bitcoin has done since Black Thursday, and it's even been increasing before that. So if we were to draw a trend line, it's basically just constantly moving upward over the past 6 months, which, more or less since Black Thursday over the past two months, it's done the exact same thing. And then daily active addresses, it's more or less also the same thing. And you can see a really big spike right around April 12th. And April 12th is when prices were starting to flatten out and people were starting to consider whether this was kind of a false bounce after Black Thursday, but this pandemic was going to continue affecting it the way it did in mid-March. But if you were to see these spikes here right around that time, it basically foreshadowed that this kind of rise was going to be possible. And with this rise, daily active addresses started to surge as FOMO kicked in, and many new addresses jumped into the mix as they saw that this was a potential big bull run up to 10,000, which it turned out to be. So generally speaking, when you have all three of these key metrics the same way that price is, it's showing that there's proper support for things to continue. We're not seeing any real divergences here. So I think it can continue right up to 12K or 13K at this point. I wouldn't say that it's going to be just a clear shot, because it never is. But with a little bit of volatility as people try to decipher whether this halvening really is bullish or bearish, they're probably going to see that it's bullish in the grand scheme of things.
Can you zoom out to the 1 year view just so we can show people what happened around the last 2019 top? So there you go, right there at the July sort of decline when it started. The daily active addresses, the transaction volume, social volume, everything was kind of going along with the price. And then when you saw these metrics start to trickle down a bit, even though the price was still trying to push upward right around this, so the early July, I guess. There was no sort of fundamental support for the price rise anymore. And these were the first sort of warning signs, and I think our price DA sort of divergence signal has triggered a few sell signals at this particular junction at the time. Like if we look at it, go to Bitcoin.
I think it was this 2019. We're looking at 20.
Yeah, but you're on Ethereum now.
Sorry about that. Yep.
Yeah.
Bitcoin. There we go. So yeah, we were getting tons and tons of bearish
signals.
divergences.
Yeah.
Yep.
So this is, guys, what you're seeing now is based on what Brian was just talking about, this divergence between the price and the daily active addresses of a coin. We've developed this model which looks at the trends. So it looks at the direction of the price of the coin, in this case Bitcoin, and direction of its network activity. And if the two are starting to diverge quite a lot, it's going to send a buy or sell signal. So if the price is going up, but the amount of daily active addresses is going down, it's going to send a bunch of sell signals. And if the price is going down, but the amount of network activity is going up, then it's going to send a bullish signal. So as you can see, there was a bunch of bearish signals right around the Bitcoin's 2019 top, which is in line with this rising divergence. For now, in the last maybe 10 days or so, there has been no sort of red signs based on this model alone. So what that tells me is that the price is continuing to rise, but the amount of on-chain activity is following, or at the very least, it's not declining at such a rapid pace that our model would send a sell signal. So as long as there's this fundamental support, we can assume at the very least, that from a fundamental standpoint, Bitcoin can chart a higher high. So keep an eye on daily active addresses and social volume metrics over the next couple of days. If you see them starting to collapse down at a very rapid pace, even though the price is maybe pushing up to 11K, these could be early warning signs that we're due for a quick correction.
Yeah. And as you can see here, especially over the last couple of months, this model has really nailed the direction of price. Obviously, you want to look first and foremost for bundles of signals like this, and that resemble consistent divergences day in and day out. And we saw, obviously a very large amount right around mid-March, right after the big crash. The markets were saying, we're still going to be doing a lot of on-chain transacting right now, regardless of this big crash. And that's why we had all of these unique daily active addresses firing off here, because the price was falling, but the daily active addresses were actually going pretty much straight or even slightly up after this happened. So we had our biggest 2-year spikes right around this case, right around this time. And that's when price obviously started to rise. And then when it hit about Ks, we actually saw that it had now finally overheated temporarily, had a few big drops. And then right around 6,500, we suddenly got another big bullish spike. And it wasn't a big one. It didn't come with a bunch of bundles this time, but it was enough to kind of predict the exact local bottom right around April 16th, April 17th. And since that time, it's been pretty much neutral, and daily active addresses have kept up with what the price is doing, which is really hard to do, actually, when you consider just how much prices have surged. So we can also take a look at Ethereum really quick, which is more or less being overshadowed right now by what Bitcoin is doing. And it's kind of the same thing. We're kind of just climbing along here. It hit a local top of about 226 last week and a half, last 2 weeks. And since that time, it's kind of hovered around the low 200s. But until the halvening happens, I don't think this is going to change too much. We may see a slight trickle upward as Bitcoin pulls up Ethereum and some other coins, assuming it continues to climb, as a few of us here on Santiment believe it will. And then I wanted to show what the altcoins are doing from a top holder perspective. When we look at what the top 100 holders of each respective key ERC20 token is doing, most of them, since about the beginning of May, have started to sell off a little bit, which is quite interesting. And we're looking at percentages between 1% and about -3%. And you may think that's not a lot, but when you're talking about just the top 100, when there's 5 to 7 figures or even 8 figures worth of holders for these coins, what these 100 holders can do with their cumulative change can drastically impact where prices are going. And with Ethereum, highlighted here in bold, it's actually moved up about 0.5% over the past 30 days. So Ethereum top holders are actually accumulating now, while most of the focus in the markets are on Bitcoin. But for the rest of them, we're seeing divergences because obviously altcoins have mostly still been moving up over the past 30 days, but the top holders are starting to sell off right now. And if we had to guess, it's probably because a lot of them have moved into Bitcoin due to this upcoming event. I would anticipate this will probably be a trend that'll continue for this last 4-day stretch. And then once the halvening happens, I would expect that a lot of top holders start to buy back in to these. So you'll see a bit of a tick up right around the 12th. So this is really interesting here. Dino already went into the breakdown, but really quick, I just want to show that over the last 6 months, it's been a pretty steady stream upwards as far as non-exchange and exchange balances for Ethereum. And we do see, the slight uptick right here, which we just looked at in the model. But for the most part, this is generally a good sign for Ethereum. And you'll see that this kind of thing is more or less what a lot of altcoins have looked for the past 6 months. But many altcoins right around here, late April and early May, are starting to show a bit of a down tick in both exchange and non-exchange behavior. Going back to what I was going to show at the beginning. So top 40 right now is what we're looking at. The top 40 blockchains and what their prices have done over the past 3 days. And what we can see here is Bitcoin is up 10% or so over those past 3 days. And it's actually the second best performing coin, which is actually quite rare because of the fact that its volatility is quite decreased. And usually compared to a lot of these altcoins, it's rather tame when it comes to how much it's going to rise. But the only coin that's actually surpassed it right now is 0x. And I'm going to go into 0x a little bit here in a second because its price has absolutely soared, especially over the last 24 hours. But a 67% upward swing in the midst of this hype all about Bitcoin's halvening is pretty rare. And there's a few reasons for it. I wanted to start by showing what the daily active addresses have been doing. So we're looking at just the last month here. And we can see that there was a pretty massive rise. Daily active addresses basically doubled, going from 876 to about 1228, a little less than doubling, between the 6th and 7th. And prices were modest here, rising a little bit from about 20 cents to about 21 cents. But for people who are watching, if you saw this kind of jump, you might think there might be something that's actually going to be happening with ZRX. And sure enough, the next day, daily active addresses essentially tripled from 1228 to 36, and the price followed it. And not until the very end of the day, during the night hours of May 7th, so this would be about midnight time between May 7th and May 8th, that's when the social volume kind of surged and we saw tons and tons of discussion about it. And usually in that case, we'll see a local top form. But in this case, it didn't. And it mostly happened because of the fact that transaction volume, which I'm highlighting here, exploded and continued moving upward following that social volume spike, which allowed the local top to basically be nullified and the price to continue soaring upward. And even though daily active addresses took a bit of a hit and didn't match what it did on the 7th, what it's currently showing now is that by the end of the day, it might actually be there because this daily active address candle is basically calculated cumulatively throughout the day. And we're at, we've got something like 10 hours remaining on the day still. So we could actually see daily active addresses right around where it was yesterday or even surpass it. So it's right on track to basically continue this trajectory yesterday. And right now it's at an all-time high, or at least a 6-month high, I believe. I'd take that back, of about 34 cents, and definitely could have room to move a little bit more. It's up about 21% from what I'm seeing over the past 12 to 14 hours or so. So this is obviously a coin to watch in the midst of the halvening. discussions for a, you know, another project that actually is getting a lot of attention other than Bitcoin. And they're pretty much the only two, really. There's another one at Status that's been doing really well. It's a frequent mainstay on our top 10 development activity coins, but I won't jump too much into that. I do want to look at one other thing for 0x, which is the sentiment volume consumed that Dino talked about in the beginning. This is pretty rare what we're seeing right now. So usually when a coin is surging and is up 67% over the past 3 days, you'll see that its sentiment volume consumed starts to look really, really positive, and the hype starts to get very real for it. But because of the fact that all of the discussion right now has been related to the halvening, this has been a very underlooked situation right now. And the sentiment has barely moved on Twitter in spite of the fact that things have surged so much. And that can actually be a very good thing for an altcoin, because when altcoins are sort of not being discussed the way they can be and should be when there's that kind of surge, it means that the price can sort of go under the radar and continue to climb. So I'm actually very intrigued to see what 0x does between now and the halvening. I think it'll obviously have some serious volatility as people try to guess what the local tops are and they sell out of it. But with, you know, a little bit of support from our daily active address metric and our, you know, discovering what the top holders are doing with it, I think we could see a bit of a sneaky continued climb over the next couple of days, which is a pretty rare call for us to have if you pay attention to these calls. Usually when we see these price surges of one isolated coin and a decoupling, it's almost always a local top that's in the future. But in this case, I think that there might be a little bit more climbing to do.
Yeah. Go ahead.
Yeah, go ahead.
Brian. No, I just wanted to say that it's interesting that there is some sort of generally the hype is not there, even though the sort of mentions of 0x are spiking quite high, because it's number 5 on our emerging trends list, which is usually, especially when a coin reaches the top 3 words on our emerging trends list, especially during a pump, it more often than not means that the correction is very, very near. So if I were somebody that's interested in 0x, I would be keeping an eye on its position in our list of top developing words on crypto social media. When it kind of jumps into the top 3, this is probably a very, very good time to, you know, rethink your position. Just a friendly suggestion or reminder.
Yep. Yeah, so that's exactly right. Right now, it is in the top 10 only because of the fact that it's the sole altcoin that's really surging against Bitcoin right now, at least in the top 40, top 100 or so. But I still think that with support from transaction volume and daily active addresses, we could see a lot of people wishing that they hadn't sold all of their bags in 0x right now. Certainly take profit. I definitely advise that. I don't think that people should just let it all ride and hope for the best until a price goes all the way up to you know, infinity. But I do think that with a little bit of patience, you might see a pretty rare chance to you know, see a very surprising altcoin surge while all of the focus is on the halvening. So watch for those emerging trends here. You can just go to labs here, emerging trends, and you'll see that 0x is currently number 9 right now over the past hour, and over the past 2 and 3, it was at number 8. But once it gets into that top 3 or 4 range, as Dino said, that's when you want to start thinking that the local top might be in.
Yeah. You can see it was top 8 and then 5, and usually what you see next is probably a jump into like 2 or 3 more spaces up. So that's going to put it squarely there.
Right. And lastly, to support what I'm saying about daily active addresses right now and how it's kind of supported this price rise, you can actually see that as the price has risen, the daily active address divergence has actually become more bullish. So as much as the price has been jumping up over the past few days, the daily active addresses have actually moved proportionally quicker how much it's grown. And you can see that the high here yesterday of about 34 cents was supported by a divergence of about 38.6%. And what I've learned from the Ethereum daily active address divergence is that anything close to about 0.4 or 0.5 here is a pretty extreme sign of a bullish divergence. And obviously it crossed 50% back on April 27th. And this was about, if I look back at the graph for 0x, if I can find it, where was it? Where was it? Maybe I clicked off of it. Let me switch over to it really quickly. Yeah, so if we look at around the 27th, zoom in just a little bit here. Yeah, so the 27th was right when that daily active address spike kind of picked up, and it was followed by a big price rise. And it actually, yeah, we saw like over those next 3 or 4 days, the daily active addresses proportionally stayed high. It may look low because this one kind of blowed everything out of the water, but when price stayed flat and daily active addresses were high, that's when we saw that huge bullish divergence in ZRX. And when you're looking at other altcoins, that's really what you want to look for, are those huge spikes that are indicating that the divergence between the amount of on-chain unique addresses making transactions and the price are diverting in the positive direction. And we saw that here. And then we're seeing a growth over the past 4 days where it's risen more and more. So I'm going to be watching closely, and I might make a post on Twitter about it today or even tomorrow to give everyone an update on what this is doing, because I think it's really interesting. That being said, I'm going to give the floor back to you, Dino, or anyone else who wants to talk about another topic.
Yep, I think we're going to have to wrap it up. It's been 50 minutes. I wanted to also kind of talk a little bit about Bitcoin's MVRV, or the average profit or loss of different Bitcoin holders, which you can find on Santiment, app.santiment.net. So you can go here and look at MVRV of different sort of between short-term and long-term holders. So for example, if you're looking at the MVRV, a 60-day MVRV, what you're basically looking is the average profit or loss of all of the people that have gotten into Bitcoin over the last 60 days. And as you can see, the current MVRV levels are quite high, which usually kind of tends to lead to at least a short-term correction. If you can see, it's kind of already approaching the top 2019 top levels, which is kind of maybe a slightly more yellowish signal. But we can move this discussion and similar discussions over to Discord. So guys, anybody that's if you've like what you heard here today, and if you are in general a fan of these types of topics and a general fan of the fundamental analysis, click on the Discord invite link in the description of this video, and let's carry on the conversation there. So until next Friday, I would like to thank Brian and Max for joining us as ever, and everybody else that's been watching this live, or once it goes public on our YouTube channel. And I'll talk to you all in 7 days.
Cool. Thank you, Dina.
Thank you, guys.
Yeah.
Thanks, guys.